It is the 23rd week of the year, and this is another edition of Capital Markets coming your way from the staples of Channels Television. Thank you very much for joining us. I'm Temple Ashaju. Now, earlier in the week, the Debt Management Office puts the nation total debt profile as at May the 31st this year at 19.16 trillion naira. According to the figures released by the agency, Nigeria's domestic debt stood at 11.96 trillion naira in 2016 as against 8.51 trillion naira recorded in 2015, representing a 40.71% increase. External debts of federal and state governments rose from $9.46 billion to $13.81 billion, and that's just in 2 years, which means an increase of 45.98%. While the Nigerian equity market has seen bullish momentum in recent weeks, with the uptrend pushing the all-share index 1,905.05 absolute points higher, this week alone, interest in the Nigerian debt market appears to be waning. In a twist of fate, however, the rising debt profile of the country has become worrisome to Nigerians. But should this be a concern in any ways? We'll be joined later on the program by a trader who will give us his insight on this development. Let's start the show proper and take a look at one of the major stories that we saw in the Nigerian capital markets this week, and that's the demutualization of the Nigerian Stock Exchange. The legislative framework that will allow the Nigerian Stock Exchange transform from an organization limited by guarantee into a new one limited by shares has passed the second reading at the House of Representatives. Leading the debate at the lower house is the sponsor, Honorable Tajuddin Yusuf, who explains that the transformation of the stock exchange into a public liability company will improve liquidity, promote competitiveness, and engender good corporate governance. The Speaker of the House, Yakubu Dogara, has therefore referred the stock exchange bill to the House of Committee on Capital Markets and on Institutions for further legislative action. The Nigerian Stock Exchange started its demutualization journey in 2001, but has gained more traction in the past few years. We're now being joined by the sponsor of the bill himself, Honorable Tajuddin Yusuf, for further analysis on the demutualization bill of the Nigerian Stock Exchange. Honorable, thank you so much for coming through on Capital Market this evening.
Thank you. The pleasure is mine.
Right. Let's look at this bill, the demutualization of the Nigerian Stock Exchange. It is a historic one, and this is the very first time we will be saying something like that in between the Nigerian capital market and the National Assembly. Why is it necessary for you to sponsor it?
Because it is overdue. Demutualization is the way to go. Stockholm's Stock Exchange did theirs in 1993. Kenya, just in East Africa, did theirs in 2014. The reason why it becomes necessary is that when you are still a mutual exchange, by implication, the ownership is limited. Investment into it is limited. When it's a company that is limited by guarantee, mutually by guarantee, it reduces the ability or the cohesiveness or what is required for individuals or corporate organizations to come into the exchange. As a portfolio investor, I would rather put my money in a company that has a reasonable public liability tendency than I don't know that is mutual by guarantee. So what Nigeria is just trying to do, what we are trying to do is to put Nigeria on the pedestal of growth. As it is today, Temple, you agree with me that we are not where we ought to be. We lost almost 60-something billion capitalization. We were 82 or 83. We are now between 32 or 33 billion. So the bill just seeks to help enhance the growth of Nigerian capital market. Thank you.
So let's look at the legislative framework. What are these legislative frameworks? What are the contents that you have in it enough to enhance transparency in the capital markets?
One very important area is CAMA. As it is today, a company limited by guarantee, if you are winding up all capital assets ought to be transferred by CAMA regulation today.
Right, it appears we lost that portion there of the questions and the discussion with the Honorable. We do hope to get back to that session with the Honorable Tajuddin Yusuf, who is the chairman of the Capital Markets Committee at the lower house of the National Assembly. But let's now quickly go on with the review of what the stock markets look like this week. With exceptions of Tuesday, the Nigerian equity markets traded on bullish momentum all through the week on the review. As such, the bullish run has been pushed into the third week in a row, week on week. The all-share index gained 1,905.05 absolute points, representing a growth of 6.07% to close at 33,276.68 points. And similarly, the market capitalization gained 658.58 billion naira, representing a growth of 6.07% to close at 11.50 trillion naira. And in terms of the sectors that were well traded on, we've got the financial services sector, the conglomerate sector, as well as the consumer goods sectors, which had 161.347 million transactions on that number. We look at the top price gainers. Mayhem Baker continued with its trajectory. It was on bid all through this week as it ended trades at 2.82 naira 84 kobo, 58.66% higher than Cadbury, which closed 43.89% higher at 15 naira 67 kobo. Forte Oil also ended the week at 64 naira 30 kobo, having gained 39.78%. In terms of the top decliners, we've got University Press, Algiers Bank, and Thomas White, with the corresponding numbers you can see right there on the screen. The market is expected to trade in the mixed zone next week with periodic profits taken. And let's move over to the NASD OTC. The NASD OTC closed 4% this week, and that's putting the unlisted securities index at 613.57 with a market capitalization of 415.22 billion naira.